on Wall Street. And after a down day across the Asia Pacific markets, we're awaiting US GDP today, and there are concerns about the outlook for growth, not just in the US, but actually as we look out for other economies around the world. Because of this attitude on interest rates, where we're expecting them to stay higher for longer, pushing yields up across the curve, and we're seeing all sorts of disturbance in the market, suggesting that we could well see a little bit of risk taken off the table. Volatility is up today. Take a look at some of the earnings we've seen last night. We got some really good numbers out from Meta on earnings and revenue. And then all of a sudden, things went sour because we heard from the chief operating officer that the ad revenue could well be hit because of the war around Gaza. Now, we heard this the previous day from Snap. So Meta seeing exactly the same thing. The stock was down 6% when all was said and done, an extended trade on the IG platform late last night. And overnight, we have seen an agreement in the Auto Workers Union at Ford. Well, certainly a suggestion. Ford workers have been asked to go back to work while they discuss and vote on it. We've got third quarter earnings out from Ford later on today. Let's take a look at volatility. It's up. That's the broad sweep of things, and this means that risk is off. This MACD pointing up. In fact, now the MACD has now peaked up at levels not seen since the 22nd of March, when we were all the way up at 25. We're currently trading at 20.76 on the volatility scale on the index here, indicating, as I said, that money's coming out of indices. That being said, London's markets is not too bad. We're now pretty much where we were as at the close of the cash session last night. Just quickly dial in what's happening on the German markets as well. Germany, we've seen a new lower low today, on from yesterday's low, but there's a little doji star candle, which means that there's little decision or trades been taken in either one direction or the other, but we are looking for something slightly lower than we saw as at the close last night on many of these markets across Europe. There's the French markets trading at 68.71, and the markets, broadly speaking, holding on to yesterday's losses. Now, let's take a look at what's been happening in the Asia-Pacific markets. We've seen some interesting news out overnight from Standard Chartered, which I want to cover in just a couple of minutes' time. And this relates specifically to the Chinese markets, with Standard Chartered having taken an impairment because of concerns about what's happening in the Chinese property and banking sectors. Today, we've got declines across the board, not because of that story particularly, but because, generally speaking, it's a down day across the markets in the Asia-Pacific session in the trading day today. Nikkei taking the biggest drop, down 2.25%. Let's look at what else is happening, because yesterday, if we wind the clock back, take a look at what happened on Wall Street. We saw losses on the major markets, mainly because of the earnings coming through that we saw. And we saw declines, as we saw in the end for Alphabet, which was the main stock on the way down as a result of earnings out yesterday. Microsoft did go into positive mode, but broadly speaking, you can see the Nasdaq down 2.43% as at the close of yesterday's session. Let's take a look at the US Tech 100. Nasdaq and the S&P 500 technically have broken some interesting support levels. You can see the big candle down on the downside here. I've been looking at this 14,440 as my price target. Now, this is the price target to look for now, 12,720. Now, that is a big leap from where we are on the Nasdaq Tech 100. And we got to pass the 200-day moving average, which is just below the 14,000 level. So a couple of hundred points before we get to any sort of headwind. But certainly this market now looking as though it wants to go lower, and possibly quite fast as well. Let's look at what's happening on the S&P 500, because same sort of price action. Big strong candle on the downside yesterday, breaking this line of support at 4,200, which have been pretty much the lows we've not seen since the 1st of June. And we went on further on down as well, then ended up with levels not seen since the 26th of May at the close yesterday, and a little doji style candle indicating, well, no move, basically, from the close yesterday. But there's indecision for traders where to take things. But I wouldn't be quite so reticent, I don't think, because short trades would seem to be in the offing. I'm looking here, first of all, at a level to watch out for. I'm keen on this one here. This is 4,100. So you've got 100, well, we're only down about 60 points from where we are, actually, 4,100. Then you've got another one on from that, which would then take you on down to here. So if you want to do little sort of steps, mini steps on the way down, first price target, 4,103. Second price target, 40.46. And then comes the big one down on here, or relatively speaking at least, down at 3,800, which would then take you down to these levels down here, not seen since the 10th of March. So that's the way I'm looking at S&P 500. The Dow is actually performing somewhat better and hasn't broken that line of support we saw established just a few days ago at 32,815. We did see declines as we saw just now, but in fact, if anything, slightly better off. We've seen some of these companies reporting earnings on the Dow recently, General Electric, General Motors, and so forth. 32,978 is where we are at the moment. A little bit further on down from the cash session close yesterday for the Dow. So at the moment, at least, things are looking a little bit more negative as we build up for today's session ahead. Now, let's take a look at some economic data. I want to start off, first of all, with a look ahead to the ECB interest rate decision expected to stay on hold after the most aggressive series of interest rate rises in its history. Let's take a look at the figures, because with inflation in the Eurozone running at more than twice its target and the Israel-Hamas conflict pushing up energy prices, ECB President Christine Lagarde is expected to make it clear that rates are likely to stay at or above these levels here. The refi rate 4%, marginal lending rate 4.75%, deposit rate 4%. The current level for some time now at these sort of levels. The idea of the Eurozone interest rate staying higher for longer than anticipated earlier this year is gaining ground, despite signs that the region's economy is hardly growing. Before I take a look at the euro-dollar trade, let me just quickly wind in what's going on in the US. We've got a ton of data out today in the US, which I'll be covering at the Beat the Street at 1:30 today. But I think for me, the big bit of news is likely to come through in terms of GDP. It's the first look at third quarter GDP numbers out in the States. Let's take a look at what we're expecting there. Economists surveyed suggest the US economy is likely to turn in what is another strong performance heading into the final part of the year through what's ahead could be significantly different. 4.2% year on year is expected widely. Concerns the outlook may see a slowdown is based on this idea that policymakers, economists, and markets will be focused on more forward-looking signals from an economy that repeatedly has defied expectations. But because we're seeing interest rates higher for longer, I think the really big concern is whether or not we're going to see a downturn in the economy because more and more people are finding they're going more and more tough. Today, we've also got weekly jobless claims, durable goods, US home sales, and wholesale inventories. Let's look at what's happening on the euro-dollar trade ahead of that. In fact, before we look at this, let's look at the dollar basket, because this is now playing beautifully into this Andrew's pitchfork, which I was talking about. In fact, I drew the pitchfork back here when we saw these lows at 105.19 back on the 12th of October, and then we got a rebound, which was part of the pitchfork diagram. And then we got support there at that channel level, and then we got a breakdown, and it re-established a bottom at the bottom part of this channel. So basically, we're facing upwards, which means that this channel that we've been in since, or this long trade we've been in since the 18th of July remains. This is just a retracement, and we're fully expecting this to see a return up here, possibly up to the green line again, and that would take us up then to levels on this chart that we'd then not seen since the 10th of November last year. So breaking this line at 106.98 will be key ahead of where we are. If you're long on this, your stop goes underneath the underside of yesterday's candle, about 105.60 or so. 106.50 is where we're trading. And the price target, I think, probably is almost certainly going to be this black line here at 106.98, which were the highs that we had back on the 3rd of October. But I'm fully expecting that to be broken with a further upside. Could it be today? Depends on what happens to the GDP number. It depends on what happens with Eurozone interest rates. It depends on what happens with weekly jobless claims. There's a whole ton of data out between 1:15 and 1:30 today, which could help give us a steer on what's happening with the dollar. But I think for me, the trade around this is definitely the euro dollar. We've seen a breakdown beyond the underside of this rising line of support, which kicked in at the 106 level. We're trading at 105.34. We've got some support just below where we are from the lows that we had back on the 8th of March. Now that's fading into the background a bit. So the 105.16 is not necessarily going to be a point at which I'd sell out a short trade on this. My price target now is the 104.48, which were the lows that were established here. You can see back on the 3rd of October, which at that point took us to levels not seen since the 7th of December last year. So that then takes us back to the year low for the euro against the US dollar. I see no reason why that's not a trade to be looked upon with positivity, because of the fact we've got the US economy quite steamrolling other economies to some degree in terms of their economic data. And as we've seen, expected today at 4.2% growth. That's far above what's happening here on this side of the Atlantic, either for the Eurozone or for the UK. So that's the lookout for that. Let me just quickly take a look at what's happening the dollar against sterling. This is sterling down against the dollar, almost breaking this line of support at 120.38. You've got a candle close below there. Then you're short all the way down to 118.05 for that. The other interesting trade we continue to monitor is what's going on with the dollar yen. And in today's trade, let me tell you, as of yesterday's close, in fact, we were beyond the 150, and we're going strong on the upside. There is no hint from me, from looking at this at least, that we've got an intervention by the Japanese authorities, which some had been fearing as we see this trade wind up, if you like. Dollar is now on this candle today. The entire candle is above the 150 level, 150.73. We're now the highest we've been since the intraday trade on the 21st of October. Now, if we close at these levels, let me just quickly take this back to where we last saw these numbers. If we close where we are, this will be the highest close we've seen for the dollar against the Japanese yen since 1990. That is a startling trade. And in fact, this is now developing into something which is becoming, I think, a little bit more worrisome, I guess, for the Japanese authorities. No evidence of stepping in. We did the other day see some news on the bond markets where we saw some unofficial, unplanned bond buying by the Japanese authorities. But this is an interesting move, which I guess possibly now can only really be unwound either by an interim move on buying the Japanese yen by the authorities or raising interest rates, which is unlikely to happen. But I think this is possibly almost certainly the reason as to why we have seen the Japanese equity markets drop in today's session. Nikkei 225 down, as we saw, one of the worst performing indices in the Asia Pacific region with this drop now. And we've got a drop down almost the 200-day moving average, 30,593. So let's take a look at what's happening in the economy and on the foreign exchange market. Some interesting developments there on the Japanese yen. We'll certainly catch up with that again in Beat the Street at 1:30 today. Let me just quickly take a look at some of these companies worth looking at. Let's bring up a chart of Unilever first of all. This one of the world's biggest brand companies. Third quarter underlying sales up 5.2%. Now, the estimates have been for 5.25%. We've got a market that's expected to drop at the start today, or certainly see some a little bit of pressure. And we saw this rise yesterday. Does that rise already plan in, or is that already planning in this number out today? Slightly weaker than expected. Possibly, I could well understand if we saw a short position here taken at 40.13. There is some support below where we are at 39.34, this sort of area down here. But Unilever possibly may see a little bit of a drop at the start of today's trade. Certainly one stock definitely going to be dropping at the beginning of today's session because I've already seen it down 6% in Hong Kong, and that is Standard Chartered. Third quarter pre-tax profit fell by a third, and this is much worse than had been expected. Let's take a look at the figures, because I think to some, this is going to be one of the headlines today for earnings out here in the UK. The company's taken a near $1 billion hit from its exposure to China's real estate and banking sectors. Third quarter adjusted pre-tax profit had been looked at 1.32 billion, estimates 1.4. But in fact, if you take out that one-off charge, that takes the pre-tax profit down to $633 million as compared to estimates of 1.4 billion. So that comparison is a little bit sort of twisted because of this one-off charge that they've taken as an impairment in the Chinese economy. Look at what happened in Hong Kong. This is the Hong Kong chart of Standard Chartered. It is off the lows now, so it's only down 4.48%. But if you take a look at what's happening here in London for Standard Chartered, where the company is expected to open the top of the hour. We were up yesterday by a margin of 0.4%. So I'd be looking to break this line of support down here, which is the 200-day moving average, which would then be below that low point there, which is the low we saw back on the 5th of September. So we're looking for declines across the board for Standard Chartered at the start. Staying on the charts, just wanted to take a look at what's happening at WPP, which I think I've got here on here, which I don't appear to. Let me just quickly bring up WPP as a stock worth watching today. Big declines we've seen recently. The advertising company trading at 690 pence as of the close last night. It's cut its full year 2023 like-for-like adjusted revenue growth outlook to around about between 0.5% and 1%. I don't know what the previous number was, but it's cut it, which is not going to be good news for the stock this morning, I suspect. We're opening, as I said, at 690. 673 is support we saw in the last couple of days, and that would then take us down to levels not seen since the 6th of November 2020. Staying again on the charts, just want to take a look at what's happening in France for a couple of companies there. This is Danone. The stock was up against some resistance late last night, as at the close, not closing too far away from the 200-day moving average and this line of resistance at 54.94. It's raised its 2023 revenue growth forecast after third quarter sales beat analyst estimates and higher prices that it's being able to lever into the consumer, helping offset lower volumes. Consumer goods giant, whose brands include Evian and Badois Water and Activa Yogurt, said it now expected like-for-like sales growth of between 6 to 7%. Previously, it had been 4 to 6%. So I think Danone is going to be one area of the market where we see some impressive gains at the start. Staying on charts, staying on companies that could well benefit from some news this morning. This is the former Total Energy, as it's now called. 62.8 is where that's going to open this morning. Third quarter adjusted net income was $6.45 billion. We've been looking for 5.95 billion, far better than expected. And I'm wondering whether we're going to get a record high in this stock actually at the start of today's trade. Let me just take that up to those highs up there and show you the longer term picture for Total. And you can see in the last few days, it's already gone to a record high because it's beaten the highs that we had back on the 17th of July 2007. So that is the effect of reaching those recent highs. And we are fully expecting an increase in the performance for Total Energy at the start of today's session. So things looking good, certainly in the oil sector, as we know oil sector companies are doing really well. I wanted to take a look at what's happening at BNP Paribas as well. In France, another company that I want to take a look at because of earnings. Third quarter net income, 2.6 billion. We've been looking for 2.75. We know that the banking sector is under pressure, and I suspect we could well end up seeing this company drop below line of support. We're opening at 56.16, 55.28 is where that line of support kicks in there. Staying in France, but I want to move on to the tech sector. The chip company ST Microelectronics, again, looking for the stock. Can't find it on here. Let me just quickly wind that in because ST Microelectronics is traded on the French CAC 40. You can see yesterday down at levels not seen there since the 9th of January 2023. It says it sees fourth quarter net revenue 4.3 billion. Estimates have been for 4.46. Company reporting poor earnings today, poor outlook. Could well be on the way down today on the stock. Next line of support for ST Micro is this level down here at 34.58. Meta out after the bell late last night on Wall Street showed better than expected results for the third quarter as revenue increased 23%. Now, this is the fastest rate of growth in revenue since 2021. It also did pretty well as well on the earnings number. EPS, $4.39. We've been looking for $3.63. That revenue there coming through at 34.15 billion against 33.5 expected. That revenue up 23%. Represents the outperformance versus competitors. Google parent Alphabet said ad revenue increased around about 9.5%. Smaller rival Snap reported revenue growth of 5%. So Meta doing really well. In terms of other metrics for the company, daily active users, 2.09 billion. We've been looking for 2.07. So that was a good result. Average revenue per user coming at $11.23 against $11.05 expected. So all the metrics doing really, really well. I want to show you the share price chart because this was an absolute shocker last night as to where we ended up. Look at the big candle we saw all sessions on the IG platform down at 28,940. So the stock initially rose in extended trade after that report, but then reversed course and fell more than 3%. In fact, we were down at the close, 6.6% down at the end of yesterday's extended session after cautionary comments from the finance chief, Susan Lee, about a potential ad softness tied to the Middle East conflict. Remember, Snap said this the other day. Meta's stock price is around about 150% up this year, the second best performer of the S&P 500, behind, yep, you guessed it, the AI chip maker NVIDIA. So it's going to show a loss at the start today when we get underway on Wall Street a little bit later on. One other company reporting earnings late last night was IBM. Revenue and earnings that beat estimates after the bell last night. Earnings per share $2.20 against an adjusted $2.13 expected. Revenue $14.75 billion against that was around about the sort of figure we're looking for. IBM's overall revenue growing 4.6% year over year in the quarter. The company's software unit producing 6.25 billion in revenue. That's up around about 8%, but in line with the consensus among analysts polled on the question of IBM's results. And in fact, we didn't do too badly when the markets closed last night. Stock ended up 1%, but in fact, you can see it was up well over 2% higher at one point in yesterday's trade, but we pulled back as at the close. Amazon.com reports after the bell this evening it's going to be a much watched result, not just for earnings and revenue, but also for its cloud business. It's forecast to report an 11% rise in revenue to 141.59 billion and a more than doubling in adjusted earnings per share of 58 cents. Now, Amazon is the largest e-commerce company in the world, and e-commerce remains a key driver of top-line growth for the company, with online stores the largest business segment, representing around about 40% of group sales. This segment is forecast to grow by 6% to 56.84 billion. But the big question is, will Amazon Web Services maintain its stellar growth? Amazon is the largest publicly listed cloud company in the world, and the June quarter, Amazon increased AWS sales by 12% to 22.1 billion. I want to show you the stock price. Late yesterday, we saw this sink in the markets because of other earnings coming through. But Amazon will report tonight, and it's expected to see a significantly lower growth rate than in recent years on its AWS business due to cautious spending by enterprises. So we will open today's trade at 9 o'clock this morning. All sessions on the IG platform at $119.08. Let's look at some of the other companies very briefly on what we're expecting this morning. I won't go into too much detail. This company, Caterpillar, is the business to watch before the bell this morning. It's coming through. It responds normally to what's going on in the mining sector. The stock will open all sessions on the IG platform at $244.14. That comes out before the bell. And I want to take a look as well at what's happening with Ford. Now, there's a couple of headlines coming through from Ford. First of all, later on today, after the closing bell tonight, we get third quarter earnings. But we have some further news overnight coming through from the UAW and Ford. And it's reported that they've reached a tentative agreement that could end a near 6-week automaking strike. The tentative agreement includes a 25% pay increase over the terms of the agreement. Now, Ford is an all-session stock, and it's due to open this morning at 9 o'clock UK time. Yesterday, it closed up at $11.75 off the recent lows that we'd had. This pullback we've seen, in fact, since the highs we saw back in July, these strikes have been now 6 weeks or so. And yesterday, obviously, there had been signs that there might be a little bit of a breakthrough. I'm not sure exactly when the news broke last night, but this could already be building that in. But I suspect the news this morning that's come through in the early hours, which wasn't when this stock was trading, it will open at 9 o'clock this morning. I suspect be a further little bit of a tick up ahead of the earnings out tonight because of the news that workers are being persuaded to go back to work as they discuss the new agreements that are now on the table. That's it for total number, well, not the total number, but a lot of the companies reporting earnings. There's a lot in terms of the total number. But I just want to quickly show you on other areas of the market very briefly as to what is happening. First of all, US crude and Brent on the way down in today's trade after yesterday's rebound that we saw. But I really wanted to show you what's happening with gold. Despite the fact we got the dollar up, we've got gold up as well. And in fact, if we close at these levels for the price of gold, it'll be the highest close we've seen since the 17th of May this year. So money continues to go back into the precious metal. I guess it's really all about trying to find a little bit of a haven in what is otherwise a bit of a difficult market to judge. That's it. We're back at 10:30 with Charting the Markets. A lot of companies to watch out for at the start of today's European session. Still looking for losses across the board. One for many of those companies and two for the indices generally. I'll be back at 1:30 with Beat the Street.